Hello and good morning. You tune into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all the cues that you need to watch out for before the start of these trades, and of course what transpired on the global front. Well, let's talk about the Wall Street then. We did see strong gains coming in on Wall Street as the sentiments become more positive on the US and Iran peace deal as the hostilities halted, and on the back of that the sentiments turned positive, and we did see the jump coming in as far as Dow Jones is concerned. 300 points of an uptick, 0.5% gain coming in on Dow. S&P 500 also traded up 1%, and Nasdaq was on a winning streak with gains of more than 500 plus points, 2% uptick coming in on Nasdaq as well. In fact, we did see that rally coming in, and we also saw Dow Jones that closed at record high levels above the 52,000 level for the first time ever. And we also have Alphabet that boosted the sentiment with gains of 5% during the Magnificent Seven first trading session as a Dow member. Now remember, Alphabet has been included in the Magnificent Seven as a part of Dow Jones, and in its first day of trade, of course, that jumped up nearly 5%, boosting the sentiment, investor sentiment. So that's how largely the Wall Street shaped up, and that is having a ripple effect on the Asian markets as well. But even the oil prices have steadied, though we do see a Brent crude that is still hovering above the $70 per barrel mark. We have Brent that has cooled off 0.7%, still sitting at $72 per barrel mark. WTI is also trading with cuts of 0.5% right now at $70.35 per barrel. Now, there is still hope of a peace deal coming through because the hostilities have been halted, and the negotiations between US and Iran are still underway, and that is why the oil is still maintaining steady at those levels. But let's talk about the Asian markets. Asian markets as of now have turned mixed. Look at the Chinese markets, Hang Seng and Shanghai both. They're the ones that are trading with cuts of 100 plus points. Shanghai is down 0.2%. Hang Seng is trading down 131 points. 0.5% gain cut coming in there. But look at the Japanese market, Nikkei, that's trading up 178 points up, 0.2% gain coming in, and S&P ASX 200 that is absolutely flat as of now with gains of just 7 odd points. And the implied start to Nifty is indicating a very muted, lukewarm start with gains of just 21 odd points. So that's how largely the markets are shaping up across the globe, and the impact on implied start to Nifty is that of a very muted or a lukewarm start to the Indian markets is what we're expecting. But on the geopolitical front, the US and Iran are all set to hold fresh talks in Doha today, according to Trump, who said that Iran requested the meeting. The announcement comes after a weekend of military exchanges that tested the ceasefire. The White House says that the US continues to honor the truce while warning that any further violence will be met with force. Meanwhile, senior officials are set to brief Congress on the proposed peace framework. Reports suggest that Witkoff and Kushner are traveling to Doha today, but US and Iran teams will meet separately with the mediators on Wednesday. Let's listen into what Donald Trump had to say about this.
Oil prices are way down. We hit $69 today. It was higher than that prior to the denuclearization of Iran fight that we have, which we're doing very well. There'll be a meeting on that tomorrow in Doha, and they're going to Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say.
Crude oil stocks in the Strategic Petroleum Reserve have fallen by another 5.5 million barrels to the lowest level since 1983. The drawdown is part of Washington's emergency release program following the Iran war to ease global supply shortages and fuel prices. Overall, the U.S. crude inventories have also dropped to the lowest level since 1984 amid strong exports and refining demands. And the U.S. Supreme Court has temporarily blocked Trump's attempt to remove Fed Governor Lisa Cook, preserving the Fed's independence for now. In the narrow ruling, the court said Cook was not given the legal protections required before dismissal. However, in a separate discussion, the court expanded presidential authority to remove leaders of other independent federal agencies. And Alphabet shares rose 4% after officially joining the Dow Jones Industrial Average, replacing Verizon While the inclusion marks a milestone, investor concerns remain focused on the company's AI strategy. Questions over compute capacity, rising competition from the Chinese AI models, talent exists from DeepMind, and heavy capital spending continue to weigh on the sentiment despite Monday's rally. And China's economy showed signs of recovery in June, helped by stronger exports to the US and an improvement in manufacturing and retail activity. A China Beige Book survey pointed to rising factory output and stronger US-bound orders, while Goldman Sachs expects growth to pick up further in the third quarter, supported by faster fiscal spending and lower oil prices. And the India-US trade deal is now in its final stages, according to the US ambassador to India, who said only the last 1 to 2% of the issue remains unresolved. The ambassador said both the sides are determined to conclude the agreement, calling it beneficial for both the economies. He also highlighted $20.5 billion in fresh US investments and expressed hope for a Quad meeting in the Philippines. Let's listen in to what he had to say.
We're getting close to finalizing that, but as you know, things are complex legal things, right? This is not a one page. We have thousands of items between our two nations that we're working on. And so the fact that we've gone so far, that's a great sign for the relationship. And I do mean, and I'm sincerely hopeful that we will be able to wrap this up sooner than later.
And while addressing the India-Greece Business Forum in Athens, Union Commerce Minister Piyush Goyal pitched India as a lucrative investment destination as India continues to grow at 7.7% despite the global headwinds. Listen in.
India grew by 7.7% in the year just ended 31st March 2026, making us the fastest growing large economy in the world. In fact, in the last quarter, January to March 26, despite 50% tariffs from the United States on Indian exports, despite two wars, the Ukraine war and the West Asian war, despite a very turbulent geopolitical and global situation, India continued to power on with 7.8% growth in that quarter.
And well, with 100% FDI now allowed in insurance, will the global insurers really flock to India? In an exclusive chat with ET Now, IRDAI Chairman Ajay Seth says that the foreign investors' interest is strong. With new licenses approved, global life insurers are eyeing India. Let's listen in.
Ours is a fast-growing economy, rising income level. Life insurance sector is growing just about at the same rate as the economy. Last 10 years, economy became 2.5 times nominal rate, nominal terms. Life insurance also became 2.5 times. General insurance grew 3.5 times. But both are growing, but not adequate enough, giving that a large unmet need in the economy. It should be growing much, much faster. In fact, just about 2 months back, two new licenses were approved. In today's meeting of the authority, one more license was approved. It will come out in the release shortly. There have been requests, or rather we have already approved one of the foreign investor, rather a promoter, going up to 100%. Then there are a couple of other applications which are under consideration of the authority. So a lot of interest coming. More interested on the general, but recently one big player also has applied on to come into not as a green field but as a brown field in the life insurance sector as well. So it's showing a lot of interest.
And catch the full exclusive conversation with IRDAI Chairman Ajay Seth this Thursday on ET Now's Insurance Mantra special, from 100% FDI and the risk-based capital framework to insurance distribution reforms. Find out how these landmark changes could reshape India's insurance industry. And with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you all the cues you need to watch out for before the start of T Street today. Welcome back. You're tuned into Market Cafe, and let's shift focus on the four major banking stocks that are likely to remain in focus today. HDFC Bank that has appointed Rajiv Kumar as the chairman and named Puneet Sharma as the CFO designate. Axis Bank will also react to Sharma's resignation, while Bandhan Bank CFO Rajiv Mantri has stepped down and is expected to join Axis Bank. My colleague Mithali is joining us with all the developments and all the rejig.
India's banking sector is witnessing a rare CFO reshuffle with leadership changes at four major private leading banks, creating a clear domino effect. Now, let's start with Axis Bank first, where the first big move came. The CFO Puneet Sharma put in their resignation after more than 6 years with the bank, with his last working day set as August 31st. Now, Puneet Sharma, who previously worked at Tata Capital as well as Citibank, will now join HDFC Bank as its next CFO. Next domino fell at Bandhan Bank, where within the hours of Axis Bank's resignation announcement, CFO Rajiv Mantri also put in their papers. Mantri, who joined Bandhan only in February 2024 after senior leadership roles at Citi and Standard Chartered, now will demit office on September 25. He's now moving to Axis Bank, replacing Puneet Sharma. That brings us to HDFC Bank, where the succession plan has been in works. Now, the veteran CFO, Srinivasan, who has been on an extension since 2023, completes his current tenure in October 2026. This will now move Mr. Puneet Sharma to take over as bank's next CFO, completing another leg of the leadership reshuffle. HDFC Bank has also announced the important board-level appointment of former Finance Secretary Mr. Rajiv Kumar, who will be appointed as an additional independent director for 4 years, as well as the part-time chairman for the HDFC Bank for the coming next 3 years. And finally, RBL Bank, where this chain effectively began following the resignation of CFO Bhuvnesh. Last December, the bank appointed Bhavin Lakpatwala as CFO on June 12, 2026. Now, Lakpatwala, he spent nearly 15 years at HDFC Bank before moving to RBL Bank. So put together, this actually is a series of isolated resignations from RBL Bank to HDFC, Axis Bank to Bandhan Bank. All the CFO baton has kept moving, turning India's private sector bank into a game of executive musical chairs.
All right, thank you so much, Mithali, for joining us with that. But let's move on to the next story. Delhi Cabinet has approved Delhi Electronic Vehicle Policy, which will come into effect from 1st of July and will remain in effect till the 31st of March 2030. 15,000 crore rupees investment will be made in the next 4 years under the new policy that aims to give push to the use of electric vehicles in the national capital. Sumita gets us more details of Delhi EV policy that has been announced.
That's right. Building on the momentum that was gained during its 2020 EV policy, the Delhi government has now announced that the new EV policy is going to come into effect on July 1st. Chief Minister Rekha Gupta said that the EV policy is going to solve legacy issues in New Delhi with respect to transportation. And in fact, the Delhi cabinet has passed this new EV policy. In fact, now for the final approval, for the final seal of approval, this will be sent to the LG, and after which this policy is likely to come into effect on July 1st. In fact, this EV policy will be in effect till 31st of March 2030. The policy includes a sharp focus on scrapping charging infrastructure, road tax and registration, and there's going to be deployment of subsidies as well to make EV buying affordable. In fact, Delhi's Transport Secretary Niharika Rai also said that there's going to be a purchase incentive that will be given in the two-wheeler category. There'll be subsidy for L1 trucks of up to 1 lakhs. There are going to be scrappage incentives as well of 10,000 rupees as well, which will be given to three-wheelers and four-wheelers as well. And this starting January 2027, it's only going to be EV three-wheelers which will be registered. In fact, school buses will have to convert 10% of the fleet into EVs in 3 years from the time of the policy implementation. So, of course, there are a whole lot of features as far as this policy is concerned. Remember, the revised draft EV policy was issued in early April, and, of course, stakeholder consultation was on. And, of course, there was some concern that automakers had, which was essentially about backing not just EVs, but also having strong enough incentives for hybrids as well.
Moving on then, industrial growth in the month of May has risen to 1.5% versus 4.9% in the previous month. Manufacturing sector growth remained steady in May, rising to 5.5% as against 4.2% last year. Electricity and gas supply also showed remarkable comeback, growing 9.9% versus a degrowth of over 5% last year. Meanwhile, mining sector saw sluggishness, down 1.6% versus robust growth of 5.8% last year. And Gaura Sengupta, who's the chief economist at IDFC First Bank, talks about the impact of fuel prices on May's IIP data. Let's go across and listen in to what she had to say.
New IIP, we get a little more detail for the mining segment, and there you can clearly see it is the fuel part which has been consistently resulting in sort of a negative growth, and it has continued, and this has been consistent for the last couple of months. It's not just a very recent phenomena. Other factors have not contributed, for example, weather, etc., that we don't see as an impact, as a contributing factor. It's mainly concentrated within fuel.
Moving on then, let's talk about all the stocks that will be in focus in today's trading session. And for that, now my colleague Meryl is joining us with all the stocks that will remain in focus. Meryl, take us through your list.
Yes, we've got a bunch of stocks that we're going to be watching out for leading up to today's session. Let's take a look at these. Starting first with Sterling Renewables, Sterling and Wilson Renewable Energy. The company has received an LOA for a large-scale solar project that's up to about 1,000 megawatt AC solar PV. Now that's almost a 1 gigawatt project for the company, and this marks the company's third gigawatt scale order in the past 9 months, reinforcing its ongoing order momentum. We've also got in focus SJVN. It signed a power purchase agreement with the Gujarat Urja Vikas Nigam, and this is for the supply of from its upcoming hydroelectronic projects in Himachal Pradesh, and this is a step that only adds visibility into the company's future capacity monetization. We're also going to be keeping a track on SIS. They have announced a 120 crore share buyback program at a maximum price of around 479 rupees per share, which is clearly a 10% premium to the company's current ongoing market price. Now, this marks the company's fifth ever buyback since its listing in 2017. In the logistics space, we'll be looking at RITES and Concur. These two companies have entered an MOU for logistics infrastructure consultancy, and this partnership aims to combine RITES' engineering and project execution capabilities in order to support the infrastructure planning and development projects for Concur. We've also got in focus today Juniper Hotels. Now they've seen the resignation of its CFO, Tarun Jaitley, effective from July 15th. And finally, Quality Walls is proposed entering into a 3-year intellectual property agreement along with Magnum IP Holdings, which is going to be extending through to March 2029. So yes, these are some of the stocks that are going to be in the spotlight leading up to today's trade.
All right, thank you so much, Meryl, for joining us with all the stocks that will be in focus in today's trading session. So do watch out for those stocks. But let's move on then. In the first half of 2026, that has been a tale of sharp contrast. While the Wall Street outperformed with the S&P 500 gaining 14%, the Nifty fell over 8%. Energy and metal stocks led the gains in India, while the IT was the biggest laggard. Ashesha is now joining us to take us through the key charts.
Well, yes, so the first 6 months of calendar year 2026 have come to an end, and clearly there was a lot of turbulence in the last 6 months thanks to West Asia crisis. So let's take a look at everything that has transpired on a year-to-date basis. First up, look at the kind of underperformance Nifty has shown as compared to US markets. Nifty has declined nearly 8% on a year-to-date basis. On the flip side, we have S&P 500, which has gained nearly 14%, which clearly depicts how underperforming Indian equity markets were in the first 6 months of calendar year 2026. Let's shift focus to commodity markets then and look at the kind of moves that we have seen over there. Gold, it was at the start of the year at about $4,320 an ounce. It has fallen to near 4,000, which means on a year-to-date basis, we have seen a decline of about 6%. But it's not just about the decline. Look at the kind of volatility that we have seen. It's a sharp uptick in the middle of the year when the West Asia conflict broke, and that it steadily declined with a year-to-date decline of about 6%. Let's also talk about oil then and look at the kind of moves that we have seen over there. At the height of geopolitical uncertainty, Brent crude shot up to nearly $119 per barrel. Since then, after the West Asia conflict cooled off and after the Strait of Hormuz reopened, crude prices have now fallen to about $72 per barrel, but this is still elevated as compared to pre-West Asia war levels of $60 per barrel, which means they've risen 19% on a year-to-date basis in the first 6 months of calendar year 2026. Let's also put the spotlight on a couple of other parameters. An Indian rupee continues to depreciate. At the start of the year, it was at about 89. It is at 94.3 currently, which means Indian rupee has depreciated nearly 5 times versus the US dollar in the first 6 months of calendar year 2026. Meanwhile, let's also talk about US 10-year benchmark yield. At the start here 4.1, it is currently at 4.3. We have seen an increase of about 20 basis points on a year-to-date basis. So these are the 5 charts which depict how global commodity markets and Indian equity markets as compared to US have performed in the first 6 months of calendar year 2026.
All right, Shesha, thank you so much for joining us with that. But hang in there, history has also suggested that July has been one of the strongest months for Indian equities. And of course, we begin July from tomorrow. And over the last decade, the Nifty, mid-cap and small-cap indices have ended the month higher in 8 out of the 10 years. With metals, pharma and IT amongst the best performing sectors on a seasonal basis. Ashesha is joining us yet again to talk to us about July seasonality. Ashesha, take us through the analysis.
Well, yes, historically, July has turned out to be a good month for Indian equity markets. On an average, Nifty has given returns of more than 3%. That's how the Nifty 50 performance has been. But the broader market, much in line with what we see normally, continue to outperform the Nifty 50 index. So mid-cap index has given an average return of 3.3% over the last 10 years, and small-cap index has given an average return of about 3.6%. As I mentioned, July has historically always been a good month for Indian equity markets. Let's also take a look at the segment-wise performance then. And Nifty Metal continues to outperform with an average return of 4.4%, followed by Pharma and IT with an average return of 4.3%. And we also have energy, PSU banks, FMCG, banks and auto, all of them giving returns anywhere between 2 to 4.5% on an average in the last 10 years. Let's also talk about a couple of other sectors and how they have performed and how a performance has been for other sectors. We did talk about pharma with an average return of about, in fact, it has given positive returns in 8 out of the last 10 years. We have auto, IT, FMCG, energy, banks, all of them giving positive returns of between 6 to 7 times out of the last 10 years, which means the probability of these indices ending in the green in the month of July this year stands anywhere between 60 to 70%. In fact, even PSU Bank and energy indices have given returns 6 out of the 10 times in the positive territory. So clearly, as I mentioned, most of the sectoral indices have ended in the green and they have given positive returns anywhere between 6 to 8 times out of the last 10 years. So yes, July is expected to be a good month, and now with geopolitical uncertainty out of the way and earnings season around the corner, we are expecting a good month for Indian equity markets.
All right, here's hoping for a good month of July, at least as far as the seasonality goes. Historically, we have given returns of at least 3% as far as Nifty index is concerned. So here's hoping for a better month for the Indian markets. But before we shut shop on this edition of Market Cafe, let's quickly take a look at how the Asian handover looks like at this point. Well, Asian markets are trading mixed right now. In fact, the Japanese yen has also hit its lowest level as we speak. In fact, it is sitting at the lowest level against the US dollar since 1986. Keeping the investors on alert of a possible intervention from the Japanese authorities. But as of now, if you take a look at Nikkei, that is trading up 0.5%. We have Shanghai that is trading down 0.2%. Hang Seng is down 1%, and S&P ASX 200 is absolutely flat. The Chinese markets in the red, and Nikkei is trading in the green, and the implied start to Nifty suggesting a very, very flat start, albeit with a minor uptick of 7 odd points. And with that, it's time to wind down on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in.